All right, so it's been a long time since I was an academic, so forgive me for that. So I am actually a practitioner in the field at this point. I largely spend my days analyzing not just central bank communications, but corporate communications as well. So what I'm hoping to do with this talk is spend just a few minutes. I'll try and keep it short because I'm keeping you from lunch, but spend a few minutes here talking you through sort of some of the modern methodology that's being utilized by not just the sort of startup community or technologists, but actually by hedge funds, asset managers, investment banks, and some of the things that we actually do sell to those folks. So we'll see. There we go. So I'll take a few minutes here, talk a little bit about my background, how this came to pass, what exactly we're doing, and a little bit more in more detail about the technology we've built and why there's been a few allusions to natural language processing and levels of sophistication in that space. And I'll talk a little bit about why there's a need for greater and greater sophistication because we're dealing with increasingly complex language, right? We're not just dealing with this good buzzword or that bad buzzword. We're actually getting significantly more complex with regard to syntax, sentence structure, and then different speakers as well. And then I'll walk through some of the insights from our central bank data as well as our equities data, looking predominantly at earnings calls. And then hopefully take a minute or two and talk about some of the sort of applications in thematic research that this technology can actually offer, really with some, hopefully, some follow-on discussion that'll touch on some of the things that have been alluded to in earlier presentations around applications of this type of technology in the legal space, the risk space, even insurance. And so very quickly, my background, as I alluded to, I'm I'll say, recovering academic. So I spent the first part of my career, oddly enough, as a game theorist before backing into macroeconomics during the financial crisis when I was modeling small group decision making and decided that the Fed was a pretty interesting small group of decision makers. What was sort of challenging for me at that point was I was attempting to model how markets respond to central banks. And what I found was it's all about communication. But there was no systematic way for me to model language. So I spent an unreasonable amount of my time delving into computational linguistics only to find out that the state of the art in sentiment analysis was really not sufficient to analyze something as complex, as nuanced, or as veiled as Fed speak. And that caused me to back off and say, there has to be something out there, there has to be a methodology that yields comprehensive, unbiased, quantitative insights. So founded Prattle, and really our mission is to automate financial research broadly, right? To streamline that process, creating comprehensive, unbiased, cost-effective research on both central banks and corporate communications, primarily for investment professionals. So we do actually work with some academics, several in this room. Thank you, Harry. But obviously our core market tends to be people who can pay a little better than academics. So I do have to run a business. So just when we talk about coverage universe, we cover 15 central banks around the world, or at least we advertise that we cover 15. We actually cover 20, but there's a few I don't feel like we have high confidence in that data based on really its lack of transparency in those markets. And so we withhold some of that data for ourselves. We then cover every publicly traded company in the United States, processing every publicly available primary source communication for each and every one of those companies. So that means we're processing just shy of 5 million documents a day in near real time. So we have to sift through that information, identify that an article about cooking apples is not the same thing as an article about Tim Cook from Apple. But also, believe it or not, that's a big problem when you're automating that analysis. But also identify that an article about Apple is not the same thing as an article by Apple, right? And so we're processing all of that, dealing with attribution, sifting through that information, and honing in on specifically primary sources, right? So in the case of central banks, this is fairly straightforward. It's speeches by policymakers, it's press releases directly from the bank, and then of course it's policy statements, minutes, transcripts, et cetera. With corporate communications, there's more of a gray area, right? Does a tweet by a corporate officer count? In the case of Elon Musk, that's largely market moving. But in the case of most corporate officers, it's actually not. And so there's some ambiguity there. Right now, we have withheld social media data as a separate data set that does not count in the 5 million documents a day we're processing. But we do process every speech by a corporate officer, press release, everything released on the corporate website. Thank you very much, Reg FD. Companies no longer need to actually put things on the wire services, which means that you actually have to go to their website to get the same information. Now, a lot of that gets reproduced, and then you have a near duplicates problem. What happens if a news source reproduces what is something that is effectively a press release, but changes the title? Is that a new document, or what if they put a new header on it, or a new intro paragraph? So there's a lot of breaking apart these communications so you don't end up having redundant information flows. Human beings are very good at this, machines not so much. Had to build a lot of technology to solve those problems. So it's a nice segue into some of the technology here, and I think Anna did a nice job setting me up for hopefully not totally disappointing you about our methodology. So methodologically, what's Prattle doing? This image is very much a caricature, but effectively, we are mathematically mapping linguistic patterns. So if you think about how the human brain processes language, we don't process language one word or one phrase at a time. We don't take a 500-word communication and say, oh, well, this word and then this word and then this word. That's not how our brains read, right? But traditional sentiment analysis was actually even more rudimentary than that. It would identify a couple dozen buzzwords that were relevant, maybe a couple dozen phrases, right? Some would be sorted into positive, some would be sorted into negative. You would add up the positive scores, add up the negative scores, subtract the negative from the positive, and there's your aggregate score. That's adorable, but it doesn't work, right? You may glean something useful out of Twitter, but you're really not going to glean anything useful out of something as complex or nuanced as a Fed statement. So we had to build a methodology that more closely mimicked the way human brains process language. The idea being that if we could identify the interrelatedness of language, those nodes of connectivity between words, phrases, sentences, paragraphs, we could actually get much closer. So that 500-word communication doesn't turn into a couple dozen terms. It turns into about, on average, 84 billion nodes of connectivity, right? Now you then have an interesting data set, right, off of a fairly small number of communications. The major innovation for us was actually being able to scale not off of hundreds or thousands or tens of thousands of communications, but off of a fairly small number of communications, because in a deep learning context, where you would actually require a huge content set in order to map to some latent dimension. We're not mapping to a latent dimension. We're mapping to a known dimension, price movement. I don't care if the Fed is hawkish or dovish in absolute terms. I care if the market is going to react as though the Fed is hawkish or dovish. So all I have to do is identify what is the market reaction. Sounds easy, it's not. In the central banking context, this meant we had to build out a complex model, actually 12 models, but essentially looking across time horizons and asset classes within each economy, and there's some variation there. The equities context is much, much simpler. We're able to control for common quantitative factors that affect price movement. So in the context of an individual corporate communication or earnings call in this case, what you can do is control for things like, did they beat or miss earnings? What's guidance? What's the industrial sector doing? What's the broader market doing? What's ROI, ROA, ROIC, et cetera, right? Run your way down that list. If you control for those common quantitative factors, isolate in on the residual price movement unexplained by those factors, we're able to then tie the language patterns to that residual price movement. The goal being to predict the price movement that is directly attributable to the language itself, not to the financials. Now, I'm not going to claim that that's a perfect system. We're making a pretty big assumption that there's not some other exogenous factor we're not identifying. But in aggregate, that seems to be the case. The data performs extremely well out of sample, so we're doing something right. I did allude to some of the underlying technology that is necessary to make this happen. Unfortunately, that there's a lot of it. One of them is our named entity recognition platform. So this is that Tim Cook versus from Apple versus cooking apples problem. We need to be able to identify not just that Tim Cook is Tim Cook, but that Tim Cook, Timothy Cook, Timmy Cook, any other variation of those names are all the same people, or in this case, Tim Apple. We actually started having to build that in because it's showing up in news articles. Yeah, so thank you, Mr. President. So the other complications here, and by the way, the way we do NER is fairly complex. For those of you who are technically inclined, this is a fleet of bidirectional long short-term memory models with an ensemble voting methodology to select on the correct model down to the individual character level in order to be able to resolve spelling errors, nicknames, abbreviations, etc. So that alone is a huge amount of technology just to be able to determine, are we looking at the right communication? Then once we have that communication, we can then actually process the language. To underpin all of this, we've had to build a back-end data science platform. For those of you who are stuck in the world of having to deploy your own models, you're probably familiar with this problem, but Spark and Hadoop are kind of a pain to use. And you look at the Python-based tools like Airflow or Luigi, and you really run into some scalability problems. So we actually built our own platform to solve for this for both ease of use and scalability. All right, without any further ado on methodology, what the hell is the data saying, right? I pulled this on, I think, Sunday night, so it doesn't have the last couple of days. We had to deliver these presentations by Monday, so doesn't have the last couple of days. But what you see here is our trend in US Federal Reserve sentiment. This is aggregate. This is all communications from all speakers, the 12 regional bank presidents and every member of the Federal Reserve Board, as well as the official press releases, statements, etc. So what you see here, pretty straightforward. Look at that. There's a pointer here. You can see over here, nice little drop in sentiment recently. What's notable is that sentiment started to fall before they hiked rates in December. So you can go back here. That downtrend, that's actually significant. So this is direct output from our front-end system, but what you can also do is then pluck out which speakers do you care about, right? Well, what if you only looked at the chairman, the FOMC statement, and the minutes? Trend is almost identical right now. So the central tendency is pretty much dominating at the moment. And that's not true for all central banks. For instance, BOJ, right now, we're actually seeing pretty substantial dissent from, in particular, two policymakers. So let's jump over to a more concrete example of where we know what happened in policy as a result. Go back, look at 2016. Everybody remembers the Brexit vote, sort of still in the news, kind of, a little bit. 2016, everybody probably remembers the Brexit vote happens, and the rest of the world was kind of doing what the rest of the world did after we elected Donald Trump, which was saying, what happened there? Well, Brexit vote, same situation, everybody going, what happened there? Well, the entire financial world was saying, oh my God, this is a disaster. They're going to cut rates immediately. So first week of July, so the Brexit vote was in mid-June. First week of July, you have Governor Carney come out and give a speech. This speech was the greatest example of confirmation bias I have seen in years, because everybody came in saying Brexit's a disaster. They're going to cut rates, right? Period. That was what they were saying. So everybody came into that speech and said, disaster, he's going to cut rates, and he's going to talk about it. So moment one, he comes out, walks on stage, and gives an introduction that's talking about, here are all the challenges we face. Then he gives the whole middle of a speech, which is about, here are all the things we've already done to combat those challenges. Concludes the speech with, here are the things we may have to do if it gets worse. How does every smart, busy person read? You read the intro, you skim the middle, and you read the conclusion. What were the two most dovish parts of the speech? The intro and the conclusion. So in addition to confirming everyone's biases, you also had the problem of how human beings consume information in order to be efficient. So what ended up happening was widespread market consensus, 97, 98% odds in futures pricing, were saying there was going to be a rate cut, right? Because everybody read the speech the same way. Now, market pricing reversed a little bit. By the time there was the policy meeting 2 weeks later, the odds were around 79, 80%, which is still quite high, depending on how you're dealing with futures pricing. It's actually very rare for futures pricing to get above 91, 92% odds of anything. So what's interesting here is our data, as you see here, this is immediately after that speech, but before they ultimately held rates in July. Our data was pointing to the fact that, yes, sentiment was falling, but it hadn't fallen as far as it did the last time they cut rates previously. That's a really important indicator. Where was sentiment at? How far did it have to fall before they cut rates previously? And what we found there was if sentiment continued to fall and the trajectory it was on, they were likely to cut rates in August, not July. That's precisely what happened. We were wildly out of consensus on that call, but it was a demonstration to me, it was a demonstration of the value of having a check on our own cognitive bias. I fell into that camp personally. I fell into that camp of thinking, surely they'll cut rates. But we had to be faithful to our model in predicting what was going to happen. So we were on the record saying, sure enough, they're not going to do it. They're likely to sound dovish. They're likely to cut rates in the near future, but they're not likely to do it yet. It was an out of consensus call, but it was one that in my opinion, demonstrates the value in having this comprehensive, unbiased data that is truly looking at everything and without our human problems. So, jumping over to the corporate sphere a little bit here, looking at some sector-based information. This is the tech sector on top and the industrial sector on the bottom. This is just looking at all of 2018. Orange trend here is our sentiment for earnings calls only relative to price, which is the blue trend. In both of these cases, you see interesting features. So obviously the tech sector, nice run up through Q2, Q3 last year. A little bit before that, but mostly Q2, Q3. And then a pretty sizable sell-off, right? The industrial sector, and I will note, some variation in our data tends to be somewhat leading in that case. The industrial sector is probably the more interesting one here. For those of you who may or may not recall, the narrative around industrials last year was entirely about trade, right? Is Caterpillar going to be able to sell farm equipment in China, right? Period. That was the entire narrative. What's interesting is that all the while, Q1, Q2, Q3, record earnings. Because ahead of any trade barriers, what's happening? They have really great sales in China. Because all of these potential buyers are out there saying, well, if there's going to be a tariff next year, I might as well move forward the need to buy a combine, right? So they buy now so they don't have to eat a higher fee later. What's really interesting about that is it bolstered their earnings calls, but not their corporate communications. So I'll come back to that in just a minute. But what ended up happening is, at the end of the year, because of that phenomenon, people thought, the market collectively thought, that industrials were priced too high. So they tumbled further during the sell-off in December. Now, of course, they rebounded nicely in January. But what's interesting here is note that sentiment didn't fall. It went the other direction because there's more certainty about trade. This tells you a story about market momentum more so than actually information about those individual companies. More than anything, this is a story about indexing. This is a story about passive investing and about flight out of assets by investors who may not be making decisions based on fundamental information. We're seeing more and more of this, and our clients are complaining about this more and more. So here are a couple of, I think, hopefully timely examples. The Boeing one, believe it or not, I put in there as the whole story was breaking, so forgive me for not including more information on this yet. But the one on the top here is Caterpillar. So this is going to present. The green trend line here, so orange trend line is earnings calls, green trend line is other corporate communications, blue line again is price. What you're seeing on the top graph here, as I said, Caterpillar, Note, as I said before, earnings are pretty stable and actually above average. Pretty nice couple of quarters here, actually 8 quarters in a row. What you see is a slow decline in corporate communications. Speeches by corporate officers, press releases, things of that nature, right? And what you're seeing there is that trend is going down for 2 reasons. One, those are not as tightly controlled by your investor relations team. So there tends to be a little bit easier for negative sentiment to leak out. But 2, there was a lot more concern being expressed about tariffs in those communications because they were actually targeting different markets with them. Oh, sorry. Sorry about that. The one on the bottom here, I assume we've all been familiar with what's going on with Boeing. My wife was actually on a MAX 8 last night, so she's fine. What's interesting is Boeing has had a pretty good run recently, right? So this is their earnings. The blue dot is consensus projections. The light blue circle is what the actual is. They've been beating earnings pretty consistently for the last several quarters. So what's going to be really interesting is to see what happens, because we haven't seen people canceling orders in droves yet. What we've seen is regulators pushing back. We've seen airlines saying that we're not going to fly these things. But we haven't seen the airlines say we're going to stop buying them. So last I checked yesterday, Boeing was down 6.5% or thereabouts. I haven't checked what it's at today, but I'm guessing it's up. Just got a signal that it's up. They were pre-market, they were down, so that's interesting. So it'll be very interesting to see, because the fundamentals right now still look solid. So this is an interesting indicator that sentiment-wise, they've been rising. Fundamentals have looked good. It'll be very interesting to see when those things break apart, or if they break apart, as a result of this scandal. So wanted to key in on sort of a more specific, precise example here, in this case an actual earnings call. Apologies for the watermark, this output from our system. So this was Apple's Q1 earnings call. I don't know how many of you might remember that. This was an interesting earnings call that had 2 narratives to it. One was they're selling fewer phones. Core business falling off, right? Especially in China. The second one was that their revenue from services was at record levels. What was interesting was the initial market reaction was down because everybody saw fewer iPhone sales. The immediate reaction to the reaction was way up. Services are doing great. That's a long-term sustainable business. What we were able to do here was key in on essentially what was positive, what was negative in that earnings call. You'll note on the left side here, we scored that just a little bit positive, 65th percentile, a little bit above 0. 0 is a neutral bound here. On the right here, you'll see this is a tree map identifying who spoke. You'll note some of the speakers are listed twice because we break out the prepared remarks from the Q&A. They're fundamentally different types of communication, and so we actually break those out. In both the prepared remarks and the Q&A, it's notable that their CEO was actually a little bit negative. He's clearly down on the fact that they're not selling devices, right? Their flagship. But their CFO was really happy about the fact that their services revenue, their numbers, was actually great. This gets reflected in something that we've actually now been able to do, which is algorithmically extract the key remarks, the core comments, the things that are driving, the language that is driving price movement. So you'll see here, the very first core comment was about services revenue being up 19% year over year, right? So you want to know what's positive here? There it is. And so the beauty of this is that our hope is that the traditional analyst model that we've all seen sort of fading away over the last few years, especially in light of MiFID II, that analysts can actually now start relying on some of these types of tools rather than having to dial into every earnings call and have to read every transcript. The analyst that used to cover 10 or 12 stocks is now covering 18 to 20, and in a few years will be covering 30 stocks. They simply can't do that anymore. So having a tool like this, the goal is to be able to highlight for them what's really important. Do I need to dig further? Do I need to go read that transcript? And we think that this is, as I said, a comprehensive and unbiased way to extract that information in a reliable manner. Hopefully an easily digestible one, but we're still working on that. One other example I wanted to point to here is the sort of broader thematic research. So trade, I've alluded to this in a number of fronts. References to trade in corporate communications has been a big question, right? How common is it that people are talking about trade barriers, tariffs, things of that nature, right? And by the way, anybody, I've seen a few people take pictures of slides. Anybody who wants access to my slides, just shoot me an email. I'm glad to provide them. This was a quick study we did. There's actually a whole bunch more that goes along with this, breaking down by sector, how essentially references to trade over time, in this case over the last 3 years. What you see is, in the orange lines are 2018. Not surprisingly, there's been a lot more references to trade in the last year than there were in the years prior. Now, it was already elevated in 2017, but despite a lot of, I think, angst about the president coming in and talking more and more about trade barriers, there was some elevation in that discussion during his first year in office, but it really didn't ramp up until last year. And that's noteworthy here, and it's noteworthy in a couple of sectors in particular. Producer and manufacturing being the huge line there, but actually consumer durables, various process industries. Transportation is an interesting one, right? For a variety of reasons, this has actually been a point of some concern because of questions around, as we move towards electric vehicles, where are we getting the materials needed for batteries? We've actually done some work looking at this, but there's some interesting questions about how do you deal with cross-border trade for the raw materials necessary to build an electric car. It's very different than the raw materials necessary to build a conventional car. So I'll take a minute here and walk through some other examples of things that we've worked on that we think are really interesting areas for analysis, and then I'd love to field some questions too. So as I said, we've done some thematic research using this technology to delve into what types of language are becoming more prevalent, and do they tie to positive or negative sentiment. That tariff study, we actually were able to tie that to how's that affecting sentiment, which it largely isn't. The other things that's become sort of increasingly interesting to us at Prattle has been really the investor relations world. As you might, not surprisingly, investment relations officers want to be able to determine how the market is going to react to what they're crafting. Well, if you have a system where you can input language and see how the market's likely to react to that, that sounds pretty appealing. What's become interesting to us is it's not just themselves they want to know that about. They want to know it about all their competitors too. And this is actually a pretty interesting insight into how the IR world works, because that's actually what really drives most corporate communication. It's not the C-suite, it's the IR world. The other things that we've worked on recently, I know there's been some talk about the legal piece, and unfortunately I think our previous speaker had to leave, but we've actually done some work on activist investor risk and shareholder litigation. Just did a project that's, I think, really interesting, looking at can you disaggregate price movements when you have a lousy earnings call coupled with a whole set of subpoenas issued by the SEC. Right? So you have a shareholder lawsuit sues saying you didn't disclose these subpoenas, and essentially the executives say, no, we just had a bad earnings call. That's what caused the price drop. How do you break those two things apart? Well, it turns out it's all about language and matching those things to the appropriate comps for when there was a similarly bad earnings call or similar subpoena action. And so we've been able to disaggregate those things based on language patterns and then various other similarities in the companies. The other applications here are really interesting, looking at risk more broadly, whether that be cybersecurity, right? Identifying common language patterns for companies that have been hacked, and therefore predicting which ones are likely to have already been hacked but not disclosed it. We're actually able to do that. And the other one is directors and officer insurance. Turns out insurance companies don't like to insure corporations that are using the same language that the Enron executives did. Who knew? And so we're able to actually map that out. And then, of course, there's things like corporate perception studies and a variety of other sort of interesting applications here. And so I think we're barely scratching the surface from a technology perspective of what natural language processing can do sort of narrowly, but also more broadly, sort of the AI applications in finance, being able to learn new language as it evolves, identify context of that language relative to known entities, and some of those things. So we've been really, I think, very pleased with the performance of the system, but I think we've really barely scratched the surface in terms of broader research automation opportunities here. So with that, I'll take questions.
I'm relaying a question I've received about the Prattle measure.
Yeah.
So when new language comes into the vernacular, like when people begin to use a new phrase that your algorithm doesn't yet recognize, you say that it learns over time. The question is how quick, what's the lag from when we first see Brexit until it begins to associate Brexit with dovish, B of E policy?
Yeah, so Brexit's a pretty easy one because it's a brand new word, right? So we can identify the context of it within the first document. The harder ones are when you have strings of language that's existed before, large scale asset and purchases were all words that were used pretty frequently in previous central bank communications, but when they were strung together, they had a totally different meaning. That actually is a little harder. So there's a little bit more of a lag to identify context there. Brexit's pretty straightforward really because it's just identifying how does this relate to known entities, and we've already keyed in that's a new word, and we already have identified sort of what the language around it means. But dealing with those new strings, we have to actually disaggregate, is this a truly new string or is this just the same language we've been seeing before, just in a novel construct that may or may not actually have that. So there's a little bit more of a lag there. Typically by the third time it's been used, i.e. third document, not the third usage, we actually have a very solid measure. By the second time we have some idea. We have not approached a project specifically about ESG, although I will note I happen to think ESG is just research, right? People tend to segregate it as its own thing.
I agree with you, but nonetheless.
But nonetheless, yeah.
Walmart says we're increasing minimum wage, for example. Could you tell them how the market's going to react to that?
Yes, because all we'd have to do is identify a comp to Walmart that's engaged in a similar policy, and then identify similar language, and then we can walk through likely market response. We can't get precise, but we can get pretty close.
Follow-up question. The debate about short-term versus long-term markets. In the case of activism, for example, should we allow shareholders to vote on an activist proposal, or are they too short-sighted to be entrusted with such a decision? Do you have a view on that? You're uniquely positioned to tell us whether or not the markets are short-sighted, or do they get it right? If you give them a long enough window, how long is that window to allow them to get it right so we can trust shareholders with that kind of voting power?
Maybe I've been spending too much time with the investor relations community lately, but my view tends to skew towards the longer term is better. And
window.
Yeah.
So the market doesn't get it right.
No, not immediately. In fact, usually the market is wrong immediately. What we see is a reaction to the reaction. So our core measure for corporate communications is actually predicated on 10-day cumulative abnormal return. We've actually found that 10-day CAR outperforms 110. So we've tested 110, 30, 60, and 90-day. We've also tested intraday. The 10-day model performs the best. The 30-day is the second best. Both dramatically outperform the 1 day because the reaction to the reaction tends to be more sustained. The other thing we find is that the decay rate, if we actually look at a shorter time horizon, the decay rate on the data is rapid. Whereas if we look at even a medium-term time horizon, 10 or 30 days, the decay rate is very, very slow. So the true sentiment of what's being expressed, the true goal of that communication, tends to be revealed over a medium term and then actually have longer term consequences.
But most of the studies of activism look at 20 to 40 days, and they're saying 6% positive response to activists, so on balance, probably a good thing. So would you agree that's a reasonable policy?
I think that's a reasonable policy. I would say be careful on the 20 to 40 days. We've seen tails on this data that last for several quarters. And so you have to be really careful if you're looking at a time window that's localized around a month. The question is, what's the tail, right? Because the reality is, do we really want companies making financial decisions based on what's going to happen over the next month or even the next 3 months, right? There's a not crazy proposal out there to push earnings calls to only twice a year instead of 4 times a year. Now that reduces information in the market and could have adverse effects on volatility. My suspicion is it'll actually have positive effects on volatility. But there's some interesting questions about that.
Yes, thank you for the talk. I really enjoyed it. Back on your slide that breaks down the trade by sector,
Yep.
is that the percent of mentions, or is that the sentiment associated with trade itself?
That is percent of mentions, or I should say that is mentions relative to percent of total language.
Is there plans to develop develop that further in terms of like aspect sentiment, which sort of tries to tease that out a little bit?
Yeah, the full study does some of that. I just pulled one of the graphs here, but we actually identified this based on individual sentiment. How does elevated use of trade language affect the sentiment of the sector or the companies? Largely, the effects are basically non-existent.
Okay, but not necessarily sentiment on trade itself, like if the companies...
Oh, if they're positive or negative?
Yeah, on trade itself.
Yeah, what's interesting is, by and large, they try not to take a view. However, their language skews a little bit negative, but it doesn't have a material effect on price movement or on sentiment.
Okay, thank you.
Right here. So you mentioned you have your own proprietary named entity recognizer for finance. Can you tell us a little bit more about the named entity types? Is it like a standard set of named entities, or you come up with?
Yeah, so NER is kind of a nuanced world unto itself. So if you're familiar with it, you can think of it sort of as a Stanford 7 class model, but we've actually added an 8th class to deal with products and brands, also to a greater extent people. We've also built in a resolution engine that works on 2 fronts. One is to reconcile, this is oddly a huge problem in financial services, but reconciling the QSIP, ISIN, Bloomberg, S&P, CDAL, FactSet, all the different perm IDs is actually a huge problem across data sets. So we've actually reconciled across all of them, which turned out to be a huge project unto itself. And then in addition to that, the resolution engine goes and searches for any mention of any individual entity that isn't in our database. We actually can comb the web to find out who that is and how they relate to the known entities we've already got. So the short answer is it's finance specific, but it has sort of some novel applications to make life a little easier.
Some of your competitors use vocal tone and audio files. What's your view on that?
My view on vocal tone is pretty straightforward. Listen to a German CEO and an Italian CEO deliver the exact same message. I don't really need to say a whole lot more there, but I will say though, we think there's actually real promise in looking at using facial analysis. So everybody's face exhibits the same 7 core microexpressions, whereas tone of voice is actually largely cultural. You need to build a huge baseline for, at the minimum, that culture, if not that individual speaker, to get viable data. Microexpressions, everybody has basically the same core microexpressions. So there's actually a little more promise in that technology, we think. We've actually done a couple of studies on this. We're partnering with a company out of Hong Kong, working on, in particular, FOMC press conferences. So when Jay Powell gets up, gives a press conference, we actually analyze that press conference, not just based on the content of what's being said, but we marry up that content to his microexpressions. He's gotten a lot better in his last couple of press conferences. He was he had a lot of disgust and contempt on his face in his first couple of press conferences. Maybe didn't think so highly of the staff initially either. That was a little odd. There were some really odd ties there, but yeah. So, but we've done a fair amount with facial microexpressions. Tone of voice is the amount of data you need to build a baseline on each person makes it very challenging.
Hi. How do you think about tracking changes in what language is relevant to predicting these things, and like what kinds of timescales are you looking at that at? So I can imagine for some of the firm-specific stuff, the news comes out, a few times a year. Some of the macro stuff, you've got like a big financial crisis that's gonna drive your model for a long time, unless you've got other ways to think about it.
That's actually an interesting question, right? How long does it take language to decay? So we've dealt with this a couple of different ways. The first one is through machine learning, which is to say we're identifying how new language relates to known entities, but also how existing language is being used in new ways. So the system is adapting and actually improving continuously. So it's an online learning methodology that does pick up for some of that. The more important way we've actually dealt with this is pretty simple. We residualize the data. A raw output from our system is relative to all prior communications from that entity, right? So a raw score from an earnings call is relative to perhaps a 15-year history of earnings calls from that company, right? We have data going back to 2003. So if that's the case, their language has changed a lot. What we've done is actually residualize that for a transformation. So the data I was showing before is actually a transformed version compared to the last 2 years. Now that's a somewhat arbitrary number, and I can tell you with complete confidence that at least one of our clients, I think several, use a different transformation there. But I think that's a pretty simple back of the envelope way to do it, but it works pretty well.
Thanks.
We can take the rest of the conversation during the break, but I think we need to move on. So
Absolutely.